Renita Young joins me as well, our senior markets correspondent. Earnings on the mind, too. Alphabet, different. Expected, though, I think, Renita, is kind of the second level report from last night. Like the substitute teacher a little bit, the backup, if you will.
That's funny.
Yeah, the sidekick.
The sidekick, right? So this company did see better than expected earnings, of course, but it announced a share buyback of $70 billion, which is huge. However, ad revenue did come down during the quarter by almost 3%. And a lot of these things together is why this stock, although it's green, although it's higher today, it's barely moving. It's a little bit of conflicting information. So if we take a look at the numbers, we can see that earnings per share came in at $1.17 on revenue of $69.79 billion. That was growth of almost 3%. And the company spent a whole lot more money this time around on research and development, likely researching more of its cloud business, researching more of its search business with this whole AI integration, right? It spent more than $11 billion, almost $11.5 billion, and then had a free cash flow of $17.22 billion. And when you break down the revenue sources, cloud brought in $7.5 billion. Search brought in more than $40 billion. And then we see the advertising revenue, which had dropped 2.6%. That brought in $54.5 billion. And services brought in almost $62 billion. So we can see things were looking up in many ways for Alphabet. And then also, the company is expecting the growth to accelerate in their search and YouTube units. Of course, it's search because it's investing heavily in AI. That's one of the places where Google put more money when they took more money out by laying off 12,000 employees.
That's right.
And by the way, the company booked about a $2 billion charge for those layoffs during the quarter, and that's something else that's kind of hitting at that stock this morning.
Yep.
But analysts don't seem to mind about it because they're still boosting the price target today.
That $2.5 billion charge off related to layoffs, office space, to your point, did eat into the bottom line, because even though they beat estimates on the bottom line, they were down from the year before, that 117 compared to 123 from the prior year. Analysts thought it was going to be worse, but they beat, but still quite a bit different, right? Because for Microsoft, the fact that they were able to do a higher single-digit sales and then, grow the bottom line, Alphabet's not only lagging on the sales part, it's a little bit dicey on the bottom line too compared to a year ago. And
you can see where things could possibly fall apart, I should say, if they decide to, or if they end up doing it, or if the company is not able to sort of shore up the resources in those areas. These could be soft areas where you could start to see an unraveling. And we'll be watching that closely during the quarter. Important to watch out for any revisions as well. Pressure's on when search is little changed, basically, around 40 billion, roughly what they did last year. So the lack of growth on the search side, I guess, kind of speaks to people's competitive take, where most believe that Microsoft is pulling ahead here with the AI integration. All right, so the stock's not down, though. At least it's going to open up basically where we closed yesterday, so that's not terrible. Let's talk about an obvious winner, Chipotle, CMG. Up $120 right now from the close. The stock just never disappoints. It doesn't. It's already a really high valued stock, right? And so it saw better than expected earnings, same store sales that grew. And this was even with raising its prices by 10%, right? So the company is flexing its pricing power right now. Adjusted earnings came in at $10.50, well above estimates on revenue that grew 17% year over year. Comp sales up 11%. The same time, menu prices grow about 10%. And the company said, by the way, right now it's pausing on price increases, even though people keep buying, but we'll look forward toward the later part of this year if they decide to raise prices again with tight conditions. But income from operations grew substantially to about $367 million. And by the end of the quarter, the company had more restaurants. They had over 3,200 restaurants. And it's planning on launching quite a few more as well. So analysts are raising their price targets, no surprise. Citi, JP Morgan, Barclays, all raising the price target. Stifel, Baird, all up.
Even the ones that were neutral on the stock are having to push their expectations higher now. We're really learning that the fast casual price point is not so different from some of the lower priced fast food places in terms of the amount of growth they're able to get with that ticket price. So Chipotle, reliable, and we'll see how it holds up today's market alongside the tech companies. Nice to have a little bit of variety there in our leadership.
Yeah.
Thanks, Renita. Appreciate it.